Let's see the other hand. Exactly. Are you sure? Hello. It's fun. Oh, good. Oh, it's so good seeing you guys little today. Let's go first now. Quick show of hands, how many of you were at last night's Creative Economy Week opening night? 1, 2, 3. Everybody else is coming, so you can tell that yesterday was a really good party. And people are still recovering. It's a safe space, we're not judging anyone. But for the purposes of inclusive growth through collaboration, being on time is important because it shows that we respect not only the person who's leading us through what we're doing, but also because we realize and recognize that what we're doing impacts how we represent ourselves and our businesses to investors and to each other. And with that, welcome back to Creative Economy Week 2026, and thank you for joining us for this morning's session. This year's theme reminds us that the future of the creative economy will not be built by talent alone. It will be built through partnerships, investment, and sustainable systems that allow creatives to grow beyond survival into thriving enterprises. My name is Ritendo Denise Mutsamwira.
And I'm Marshall Mutsamwira.
And together we are the sibling duo. So throughout this week, we have seen how collaboration across sectors from fashion and music to heritage, literature and entrepreneurship can unlock new opportunities for Zimbabwe's creative industries. Across Africa, the creative economy is increasingly recognized as a powerful engine for growth. According to UNESCO and the African Union, the cultural and creative industries already generate over $58 billion annually. Not we are projected to, but already we generate over 58 billion annually and support more than 2.4 million jobs across the continent, with projections showing continued growth as digital markets expand and African creative products reach global audiences. But for many creatives and many of us in here today, a key question remains. How do we move from passion projects and small enterprises into scalable, investment-ready businesses? And that is exactly what this session is all about. And to take us further into that conversation, I'll hand over to Marshall.
Thank you very much, Rutendo. And I think for all of us here who are present, I know that we're going to learn so much of how we are able to scale sustainably and having the path to capital that Peggy is going to unpack for us. It is through the conversation that she'll guide us through that I believe we're all going to be impacted positively in what it means to structure your business accordingly. I think yesterday at one session, we had creatives challenge those who were on stage when Tare was a panel discussion and was present there. It seemed like everybody had their guns blazing saying, give us the money. I was like, but where's the structure? And that's what we're going to be getting from Peggy Mapondera today. Sure. So Peggy is an investment professional with over a decade of experience across private equity and corporate finance, and she currently manages and works across a portfolio valued at over 400 million United States dollars.
Please can you give a round of applause?
Please clap. Yes. Yes, I mean, she is literally a representation of what it means to be able to understand what structure looks like financially, how as creatives you're going to learn very key points. So have your papers and pens out. It's going to be note time, and we do hope that you've got lots of questions for her. And on that note, I'd like you to please put another warm applause together for Peggy Mapondera.
Thank you, Peggy.
Thank you so much. Can everyone hear me and see me? Good. Thank you so much for the lovely introduction. It's interesting when you hear about yourself from other people in a space like this, and you're like, oh yeah, that is me. I did do that. So we've got 3 hours together, and I want to make this session as practical as possible. I really want you to have takeaways that you can go back to your businesses with and actually apply certain principles that you can think about as you sort of set your business strategies, as you think about the visions that you have for your businesses, and sort of try to map out the route to getting closer to that. Okay, so in part 1, I'll take you through the investor's lens. I want you to now think like an investor. Take off the entrepreneur hat, put on your investor hat, and put yourself in the position of somebody who has money and what they might be looking for in order to give somebody that money, what they expect in return for it, right? In part 2, we'll look at the numbers that matter, sort of going on a deep dive into the financial statements, your basic 3 financial statements, understanding them, not so much in how they're calculated. I know a lot of people get intimidated by the talk of numbers, but it's really about what those numbers are going to tell you and tell an investor about your business, about where you're at. Sometimes it will flag certain areas that need to be fixed, and then you can start taking practical action towards doing so. Then we'll have a short break, and then we'll come back for part 3. We will discuss going to market, so how to pitch, what investors want to hear, how to tell your story, how to be ready in terms of being able to be due diligenced. And in part 4, we will look at a forecast builder, which is sort of an AI tool that I've created that I hope will help somebody who's not in a finance background or an accountant to at least be able to generate just basic financial forecasts by using a few prompts. I'm still tinkering with it, but I think it will be helpful in at least getting something basic that you can then go to someone who can help you either unpack what the numbers are saying and things like that. So, start off with a little icebreaker. Just a short 1-2 minute introduction of each of you. We'll go around the room. So just say what your name is, your business and what it does, and any current challenges that you're facing with your business. And I think you can also add there if you have ever raised or tried to raise money for your business, be it applying for a loan, be it friends and family. Maybe share your experience. How did it go? Was it a good experience, a bad experience? Was it successful? Did you realize a lot more is required and maybe you aborted the mission? Just anything that you can share with the rest of the cohort, and I think it'll be valuable to hear others' experiences. So, start with this table, and then we'll just go around, snake around like that. It was with Rutendo.
Morning, everyone. Is it on? Can you hear me? Okay. Thank you. Morning, everyone. Thank you, Peggy. My name is Mbai, and I am a fashion designer. Last year, I changed my niche to menswear. So far, so good. And so we do menswear in organic fabric, specifically linen. And one challenge that I face is, I guess, supply of fabric, like local fabric, local good fabric, because most linen we buy is imported. So I think that's where I'm at now, trying to solve, okay, so how can I kind of like bridge a gap in the market where we can't find materials to produce. Yeah.
Great.
Thank you.
Sorry, in the name of your business?
It's Mukonde Studio.
Morning, everyone. My name is Wainkos Makaya. I'm the creative director for Zeta Couture. It's a label that is rooted on craftsmanship, heritage, and legacy, and more so empowerment. We focus mainly on bespoke pieces and limited ready-to-wear retail ranges. The main challenge that we've been facing, I would say there are two. The first one is the same one that she's having, of the consistency of fabric supply. At times you get the fabric, but when you want it to produce more, to scale up, the fabric is no longer there. And the second challenge is generally the perception that the market currently have in terms of fashion designers. At times we are labeled as tailors. That distinction is still not yet there. So even when you are pricing your products, you'll see that people might not really understand how you are, where you are going and what went through, the process that you went through to get to the final product. They want to compare you maybe to somebody in, I would call a place in Mbari Magabadze to say that same short is $2. Why? So those are some of the challenges that I'm currently facing.
Morning, everyone. My name is Shamaine Zrademuka, and my brand is called Shah Designs. Shah Designs focuses on 3 key pillars, which is memory healing and connection. Due to the loss of 2 uncles from COVID, they also had an underlying condition, which was diabetes. And I decided that I wanted to cater to diabetic patients, and then finding out that diabetic patients also face dialysis challenges and they don't have clothing, adaptive clothing that they can wear when they go to their sessions, was something that I found very lacking, and I wanted to tap into that. So why healing? It's because from the loss, you want to heal, you're grieving. And then why memory is because you want to make memory with your loved ones. And then connection is just basically you want to connect with the people around you while they're still alive. And so this is basically the ethos of our brand. So our silhouettes are more relaxed, laid back, for the sake of, healing and memory connection. So I guess one challenge I would say is costing the product to actually get a proper revenue out of it, as well as just market access that believes in the vision and what I do. I think that's everything. Thank you.
Good morning, everyone. My name is Maslin Mambariza. I'm a fashion designer, and my brand is called Mapondera Collection. So basically what I do, I design thoughtfully crafted maternity wear for pregnancy and beyond. So it's something that you can wear when you're pregnant, when you're nursing, even after. So one challenge that I face mostly is like explaining I always have to explain my pricing because of like the fast fashion, sorry. Sometimes someone might ask you why this is costing that much when I can get it on Shein for like this much. So you always have to explain to them why your pricing is different from what they're getting on Shein.
Morning, everyone. My name is Natsai. I own a jewelry brand. I make jewelry out of polymer clay. A current challenge that I'm facing is changing customers' view of handcrafted pieces, handcrafted jewelry, because once they hear handcrafted, they think that my products are cheap. And once I explain to them what goes through the process, what goes through making those products, they don't really see the value in them. So right now I'm struggling to pitch myself per se, and tell my brand story so that people can see it.
Hi, my name is Caesar Mkwedini. I'm with Matamba Film Labs for Women. So we have recently pivoted into an institute where we still maintain the non-profit component, but also are now also focusing on the sustainable business development component so that we can be sustainable. So our core business has been to empower women, creative women who are into digital storytelling, what we call new media storytelling, so which is your virtual reality, AR, AI, animation, gaming, that sort of thing, and also ensuring that they have access to the equipment to be able to do that, no barriers in space. And so I guess one of our biggest challenges now is that because previously people knew us as Matamba does training for women. And now when you then like try and say, okay, we are still doing trainings, but also we have to be sustainable. So we now want to also give a charge or a cost to this. Or we are also trying to let out our equipment. First of all, when we say we're doing a charge to, if you want to come for training, you pay $300, $500. People are like, oh, Matamba, you're funded. I also don't know that we also in this season where we are trying to navigate across dwindling funding. And also now when we also are saying, okay, we need to be sustainable, what do we have? We've got equipment, how do we also go out and do work for people? We also have some funders who will say, yeah, but that funding, maybe we gave you that equipment grant so that women could access for free. But how do we keep our doors open if you're not making money? Because you just gave us equipment grant, but what happens after?
Hi, morning everyone. My name is Rumbi. I'm a visual storyteller. I'm a filmmaker. I tell stories predominantly through documentary film. And there's no dearth of stories. We've got lots of stories. The challenge is in structuring finance around telling those stories. So a lot of the films that I make are cross-border. And when you go into a partnership with co-producers, you need to come with something on the table. So how do we now get our local investors to be early adopters into these ideas that we have so that when we go onto a wider international market, we have something to offer? And then once we are there, structuring the finance, understanding how other people's finance systems work so that we can get bigger productions made.
Hello, everybody. My name is Taremeredzwa Takudzo Nengare, and I am in the business of making ideas better and making people be the best version of themselves, as well as helping creatives turn their passions into viable businesses. One challenge that I've realized is that people don't value themselves and they don't want to invest in themselves. So trying to convince someone who has absolutely so much potential that all they need is someone to just help them, guide them, coach them into being the best version of themselves is one of the biggest challenges that I've faced. And then also, it's the same problem, I guess. Once you mention the cost factor, it's always, oh, that's too much. Why? How? But I think as much as it's a challenge, I'm also at the stage of understanding that I have a target audience, and the people that are willing to spend that much on themselves are people that I'm willing to work with because they've taken the time to invest in themselves.
Hi, good morning, everybody. My name is Dayong Malo, and I'm founder of Acting Chief Images. We are I would say film studio, but we're more interested, I think similarly, I'm at a really great table. I just realized that. But we are very, very interested, I think, similarly in telling African stories, but being able to scale them globally. So we don't want creatives coming in and just saying, oh, I want to make a short film that isn't structured well. So right now we are in the process of working with different various writers and filmmakers to say that this is how you structure your scripts, this is how you get it into production, this is how you work in pre-production and everything, and teaching them step by step and walking with them. So we've actually cross-collaborated with another producer in South Africa. So we're working on a project right now. That's one of the things we're working on. But I would say probably one of the current challenges we are facing is because we are a startup. This company, we only founded ourselves last year, so we've just started. And it's trying to figure out which spaces to get into to get the funding, number one. And number two, being able to bring in creatives who aren't only thinking about, oh, I want to make a project and be famous, but thinking, how do I turn this project into, one, a sustainable brand, and number two, being able to go beyond thinking 3, 5, 10 years into the future to say, how do I make money off of this product that I've just created? So that's what we're mostly interested in as well, yeah.
Hi everyone, my name is Ropa Fazoma Pira. I am the creative director and founder of a brand called Soleil. One of my current challenges is explaining my pricing to my customers and helping them to understand the value of handmade clothing.
Good morning, everybody. My name is Rutendo Georgia Kusano. I'm the founder and creative director of Monkey Rain Atelier. Monkey Rain, I always get questions, what does that mean? I'm from Bulawayo, and we're used to saying when the sun is out and it's raining at the same time, we call it ukushada kwezinkawu. They say the monkeys are getting married. It's a monkey's wedding. So I just kind of flipped it and called it Monkey Rain as a exploration of the juxtaposition of good and bad, two opposing elements existing within the same space at the same time. So that's the brand story to date. From about 2024, I've managed to raise 20,000 in funding for my business in total. Sounds nice, but it wasn't easy. And, you know, my biggest challenge is being everything as a sole founder and creative director and designer and stylist, pattern cutter, sometimes tailor, sometimes social media content creator. That's my challenge, being everything. And so I have managed to introduce a lot of division of labor, but still not yet enough. And everything that everyone else mentioned is something that I'm also struggling with, like the explanations, the costing, and yeah, so I'm resonating with everyone.
Yeah, thank you.
Sorry, just a question. The 20,000 you raised, was it
Yes.
a loan? Was it
Grants.
Grants.
Okay.
Yes.
Hi, my name is Nodia Marasa, and I'm a visual artist, and I am the community manager at Matamba Film Labs. And So I'm here so that I can get more information on how us as creatives, as I am the community manager, I want to be able to impart to my community how they can take their entrepreneurship and make it, and how they can take their creativity and make it into an entrepreneurship, how to jump over that gap and actually make money for themselves as women at Matamba. And the common struggle is that transition from beading, necklaces, or making clothing into making it actually a business that can be passed down to future generations. As women, we want to be able to pass that down as generational wealth. So that is the main problem that I've seen in my community. So I'm hoping to learn something to give back to the community that I run at Matamba Film Labs.
Morning, everyone. My name is Richard Sabawo. I am the creative director at Neander & Co. Apparel. We are a streetwear brand that focuses on Afrocentric streetwear and also the trends that are all over the world. So we usually travel around the world and try and see and do research on things that are trending and what's going on. Our current challenge is penetrating into the African market, especially Zimbabwe, since we've kind of figured out how to penetrate into the diaspora. Yeah, that's pretty much it.
Morning, everyone. My name is Tinashe Katlela, and I'm the founder and creative director of Haus of Tinashe, a brand which focuses on Asian and African culture. And one current challenge that I'm facing is that I'm not getting enough fabric material for me to spark my creativity.
Morning, everyone. My name is Tashinga Chikombe. I run a brand called Yet Galore, yet defined as by now or then at a given point futuristic. We transform discarded materials into refined wearable pieces. And one current challenge that's being faced or I'm facing is scaling production and staying true to the commitment of being sustainable. Yeah.
Morning, everyone. My name is Nobunaga. Nobunaga written with 2 syllables, Nobu being trustworthy, Naga being leader. I run a brand called Sex Sounds Asylum. Sex Sounds is divided into 3 things. Sex being what gender you are, whether you're male or female. Sounds being not only what you hear as projection, but what can be produced. Because when you think of a memory, a piece of clothing, anything, you also hear the sound of when it happened and when you got it. And asylum, like with etymology, when the name was first taken, asylum was a safe haven, a place where people could go and be free. So asylum then comes through as being defined as anything which is free for you to do, but waiting for the ability that you can produce. And the current challenge that I have, it's more or less on marketing. My company or my team, it's full of artisans. So everyone wants to put ideas out, but no one wants to do the marketing part. So you do get sales, but it can be better if that was fixed.
Morning, everyone. My name is Decidin Pesani. I'm the creative director and founder of the Homeless Kids, which is a vibrant sanctuary that supports marginalized boys from underrepresented communities through visual arts, music, and fashion. My biggest challenge is being a one-man army. That's literally my deal.
So we don't know what's going on. So
it's just an icebreaker, just a quick 1-2 minutes, your name, what your business does, and any challenges you're currently facing.
Hello, my name is Nizemana Claude. I'm from Kigali, Rwanda. I came through Inzira in collaboration with Inzira Creative. I am an artist, a sculptor, but I collaborate with fashion and theater performance and film by using my language as a sculptor to collaborate with those other fields. So I think on my side, or one of the challenge, it's about to communicate and to collaborate with other people from other countries, especially other African countries. You know, sometimes it's easier to go to collaborate with, let's say, European country more than even collaborate with African countries. So, for example, for me, I cannot travel to South Africa easily, so I have to get service passport to be there. So, something quite difficult from my side.
Thank you. My name is Shema Gaitan. I'm an artist, work through fashion, visual art, and installations. I have a brand, Gaitan, which is a contemporary streetwear brand. And then the challenge is the same as my friend said. In the starting, it's easy to go to Western countries to collaborate with their people more than how I can travel to African countries. Easy, you know, different. It's expensive and it's difficult when you get there. You know, it's I don't know why, man, but maybe it gets solved. I don't know.
Hi, my name is Winnie Rugamba, and I'm from Kigali, Rwanda as well. I work for Inzira Creative Partners, which is a hub for creators, which is how we were able to bring Claude and Shema. I'd say one of our current challenges is trying to figure out how to build a system that keeps us who are serving creatives accountable, as well as keeping creatives accountable as well to what they say they're going to do, so that we can be able to serve them well. Yeah.
Good. All right. Thank you. Just in the interest of time, unfortunately, I'll have to end the icebreaker, but hopefully for the people who've arrived a little bit late, hopefully we can hear from you as we go through the session. The session will be interactive, so please definitely, if you have questions or anything, stop me. If there's something that resonates based on your own experience, please share. We all learn from each other's stories and experiences. So a little bit about me. That's me. Marshall gave you an overview of what I do professionally, investment banker by profession. I now work in the private equity, M&A kind of space. I sit on the board of an asset manager and a private equity fund. And yeah, so I've raised capital across different markets in Africa, from Botswana to South Africa, Mozambique, Namibia, Tanzania, and beyond. Aside from my professional work, I'm really, really passionate about Zimbabwean specifically, but African more generally, contemporary art. And I'm building what I call the Mapondera Collection, which is a private growing art collection that I hope will contribute to our collective creative economy, the telling of our stories, the documenting of our lived experiences and history through contemporary art. My North Star, what I ultimately feel is going to be my life's work, or is my life's work, is that I wish to create a gender-led fund that will specifically invest in early-stage female-owned and female-led businesses in Zimbabwe, in the region, and beyond. Our landscape in Africa is very tough, and in Zimbabwe specifically, you'll find a lot of funding is geared for established corporates. And this space that we call the missing middle is where a business is now coming from bootstrapping or self-funding and needs to make the leap to becoming a scalable business. That funding is still a little bit tricky to get in our context, but it's not impossible. So I will take you through the first part. Let's look at the investor lens. Okay, so like I said, we'll be thinking about what investors look at when they're looking at a business to fund. And these three questions, they really apply to almost any business, whether it's a product business, service business, whether you're selling bread, selling clothes, whatever it may be. These are fundamental principles that apply. So the first question is the market big enough? Okay. So I think from some of the experiences shared around the room, where you are having to explain your value, having to explain the positioning of your brand, etc., it might require you taking a step back and now looking at what is the market? Who is the potential market? Globally, big picture, we look at what's called total addressable market, right? Total addressable market is any and everyone who could possibly be interested in your product or your service, okay? But obviously, you can't service all of them. So for example, for a fashion business, your total addressable market is all women who wear clothes. But all women who wear clothes are not going to be necessarily your customer, right? So you have to now sort of narrow it down. And then you look at serviceable addressable market. So that is the actual segment that you can reach within your distribution or your marketing or whatever it may be. So now we say, okay, all women in Harare, or all women in Bulawayo, or all women in Gweru, based on where you are located, how you're able to reach your customers, that is going to be your addressable market, who you can actually address. But you still need to narrow it further, because you now have to look at, okay, what is the actual realistic market share that I can capture within that addressable market? If we're saying it's Harare, if we're saying it's women women of what age, women of what income, women of what interests? You know, some people might want natural fibers, some people might want high-end luxury, some people might want handmade, some people might want bespoke, unique, one-off pieces, some people might want streetwear. It now depends on where are you actually targeting, and hopefully when you find those people, that serviceable, obtainable market, that market you can actually obtain, hopefully through your brand strategy, your marketing, your positioning directly to those specific people, they will understand what it is that you're offering them. And then that need to explain should hopefully come down a little bit. There is a reality where we are currently in a space where I think you also have to educate your consumer a little bit, which is going to take some time. You know, some people, like the example that was given, some people say, oh, I can get it from Shein. You can get it from Shein, but what is it actually made of? What materials have been used? How long will it last you? You might buy this outfit for $10, but maybe if you invested in an outfit for $100, you're going to have that for 20 years. This outfit for $10, you're going to have to keep rebuying and rebuying and rebuying. So it's also about, there's going to be sort of a transition time where you have to also educate your customer. But that's more of a business strategy, branding, marketing kind of discussion, which is not my area of expertise. But there are people, there are professionals who can help you with that. And as Tari was saying, it's important to invest in what is going to take you to the next level. If you map out your market and you come down to your numbers and you say, you know what, there are 10,000 potential people who would be into my product at my price point and the way I deliver it. It's then worthwhile investing a few $100s to get a brand expert who can help you target directly, because you're going to have potentially 10,000 customers, right? So you have to look at it from an informed position to say, I'm investing in this because I could actually see down to the numbers what it's going to unlock for me. People, systems, processes. Investors want to know, can the team execute, right? People here who are the one-man bands, an investor says that's high risk because you cannot be everything in the business. You just cannot. And that is a huge red flag, right? They want to know from the people, can you as the founder or the visionary, because sometimes founders and visionaries are not necessarily operators, right? So you are the vision, you have designed the brand world, the vision of what your aesthetic is going to look like, you do the creative. You're going to need someone who does the money. You're going to need someone who actually does now manufacturing or the production if that's not your skill set, right? So you need to be able to map out and create and build a team that can support you in the things that you're doing. Ultimately, you also need to be able to show that, you know what, if I step away from the business, it doesn't collapse. Because it's not just me. There are people who feed into a system through various processes that are set in place. It's not just, you know, catching everything on the fly. You actually have things in place that everyone knows what they're doing, why they're doing what they're doing, and how it feeds into what everybody else is doing to make the business work. So this is really, really a key thing. Businesses will also, investors will also want to look at, have you done this before? What's your educational background or your professional background or your technical training? What are the things about you that de-risk this business? If you've done it before, or if you've been trained to do what you're doing, that already gives an investor more confidence that, okay, this is something that can continue on into the future. This business has a future. So that's something very key to think about. Then finally, will the numbers work? And there's certain numbers that investors will always care about. And remember I said in the intro, people are often intimidated by numbers. They just think, oh, accounting and finance, don't really understand it. I don't know how to calculate it, etc. This is where you don't need to become an accountant, or you don't need to take an accountant training. You can hire someone to do that for you. But it is important to be able to interpret accounts, understand what the numbers are telling you about your business, because the numbers, in banking they say numbers don't lie. It will always come down to the numbers. Yes, you've got a great story, you've got a great vision, but what do the numbers actually say about that story? You say 10,000 women want to wear my dress. Okay, where are the numbers that substantiate that? Or 10,000 women want to wear my dress. I know this because I've already sold to 1,000 of them. And this is the feedback that they've said. This is the price point I've been selling it at. This is how much it costs me to make this dress. And this is my profit left over. So if you give me money and I scale it, I'll just multiply what I've already proven I've done. And that's the outcome that we're going to get. So numbers do not lie. You want to look at your gross margin. That is the cost, well, that is the money you're going to make. Sorry, how can I put this? So it's basically your revenue, the price that you sell an item at, minus the cost of making that item. That is your gross margin. And there's certain benchmarks for every type of business that give investors a signal to say, okay, this is healthy, or oh, there's something wrong here. So for example, for a fashion business, your margin, your gross margin should be in the 40% up. 40 to 60 is generally fashion business's margin. When your margin is too low, let's say 20% from the gross margin, it means that anything that comes after actually making your garment, let's say you have a shop, let's say you employ people, let's say you pay electricity, you want to replenish your materials, your fabrics, etc. You're not going to have enough money left over after selling that garment to cover those things that come after, and that's a red flag. So now when you're looking at your gross margin and you see that it's below 40%, it's below 20%, you now need to say, do I have a pricing issue or do I have a costing issue? So maybe you can position your product differently to attract a higher price, or the way you're making your product maybe can reduce your costs, either reducing the cost of material, reducing how much time it takes, how many people are involved in making their product, etc. So it's all about managing that margin. Margin is very, very important. Then path to profitability. In the first few years, businesses are not necessarily expected to be super profitable. It's actually very normal to make a loss, maybe your first 1 or 2 years, start breaking even, year 3, 4, and keep growing in that way. But you have to be able, through your numbers, to sort of show that. you don't want to tell an investor, oh, eventually we're going to make money, don't worry. How? Where? At what point, right? You can't just say, yeah, it's just going to work. You need to know that at 20 dresses, I'm covering all my bills. At 20 dresses a month, you know, you need to really know exactly what the number is, not just an estimate, not just a maybe, but like really do your maths so that it can come out. Capital efficiency is also now looking at every dollar that goes into your business, how many dollars come out of it. So when you go to investor and say, if you give me 100,000, depending on the nature of the investor, some want to see it double, some want to see it 10x. It really just depends. And it depends on the industry and what's normal for that. You see big tech companies, they do all these 10x, 20x, crazy growth. Other businesses, it's more modest. It just really depends. And it all comes down to the size of the market, your margins. That's going to tell you about your capital efficiency. What's going to go in and what's going to come out from what you put in. And then you need to look at realistic projections. So when you're doing your forecasting, for example, you say this is the base case. This is like something that I'm pretty confident about, but worst case scenario might be a little bit less. So you discount your forecast by, let's say 10%, 20%. Things don't go according to plan. Do you still make profit? Are you still viable? If things go even better, there's potential for it to be even better than your base case. So you have to always look at the scenarios and be as realistic as possible. The worst thing you can do is take money based on promises that you cannot deliver, because it just creates a whole host of other issues. Okay. So the unit economics, this is where you look at every product or every service that you provide. And you want to whittle it down to, I mean, it can be a little bit difficult if you've got a lot of different types of products. They call them SKUs, I think, in the fashion business. But it would be good if you know your unit economics to say, if I'm making dresses, this is my margin. If I'm making t-shirts, this is my margin. If I'm making suits, this is my margin. Because not every single item you make is going to have the exact same economics. And if you know your range to say, my unit economics, my unit margins range from 30% to 60%, 100% sometimes. Sometimes there's something that can cost very little to make, but because of what it is or because of how it's positioned, you can sell it for twice as much because people are still willing to pay that price. You don't have to price your product just based on a margin. You're pricing based on various different things, and they will then come down to a margin that you can sort of look and analyze. And if you see that I've got a high margin product, maybe you push more volumes of that product because it's going to bring you more. And then maybe there's a product that will attract the clientele you want. It has a lower margin, but you do one or two of those because you're like, I just want the customer in the door. I'll do this one. It's a smaller margin, but they're going to go on and continue buying other high margin products, and then it all balances out in the end. So that's sort of how you think about your unit economics. Okay. So when we look now at the numbers that matter, we're going to look at your 3 basic financial statements. Okay. The first one being your income statement. This financial statement basically answers the question, did I make money this month, this quarter, this year? You should be keeping track of these accounts on a monthly basis because it keeps you on track with what your assumptions might have been about your business and where you actually are. It is also so important to document your operations. Document your sales, document the pricing, document your costs. How much are you spending when you're buying materials? How much did you buy it for? When you're paying salaries, every single thing, document as much as possible because it's ultimately going to be good practice that makes you investable. Every funder is going to ask you for your financial statements, whether they're a banker, whether they're an equity investor, whatever it may be. they're going to ask you to see your records because numbers don't lie. And yeah, that is just the most critical part, and it keeps you on track. So typical financial statements, you have your revenue section, which shows everything you've sold, be it physical products. Maybe you have other lines of business. I think we were talking about the Women's Training Center. There can be actual products that you sell. There can be trainings that you do. There can be events that happen. There can be services you do for other businesses, etc. That all comes into your revenue. So you total all of that. Then you look at the cost of getting that revenue. So how many materials actually went into making the products that you sold? How much did that cost you? That will then give you your gross margin. And after your gross margin, you now put in things like your wages, your rent, your interest, if you've got loans that you've borrowed, other supplies, utilities, all of these other things. And then that leaves you with your net margin. And hopefully that should be a profit at the end of the month. So what investors typically look for when they look at your income statements, historically, they want to see, has there been growth? Has there been growth to your revenue? And has that caused your expenses to also grow at the same rate? Ideally, the more you start to make, the more you get your volumes, you should be able to increase your margin because your costs should stay the same. If your costs are going up at the same time as your revenue, something might be off. So for example, you're selling more, maybe you're paying yourself more. That now is like the margin is never going to increase because every time you make more, you're going to give yourself more. So, you know, the business stats do not necessarily make sense. So you have to have certain things that you hold constant and certain things that when your revenue grows, we now see profitability also growing. Yeah, so people do tend to focus on revenue a lot, but revenue is not profit. So you always have to care a lot more about your margins and your profit. And profit is also not cash. So that's something that will come to when we look at the cash flow statement. Okay, when you look at the balance sheet, this just shows what do I own versus what do I owe. And this is something that you typically will do on an annual basis. It's something that just sort of shows the health of your business. To say, if you have more liabilities than assets, you're basically bankrupt because you owe more than you actually have. That's a very high risk situation to be in. So the balance sheet just sort of keeps you true to say, okay, what are my levels? What are my debt to equity ratios? How much cash do I have versus the things that I owe? For example, let's say a supplier gives you 30 days to pay them. But you've got a contract with a corporate to supply something and they're going to take 60 days to pay. You need to be able to match what's coming in with how much you owe, for example, especially when you get to a stage of scaling your business. Those kinds of systems and processes come into play a lot. You might be at a stage currently where you're sort of operating by order. You buy material when you have an order, etc. But you'll get to a stage where you need to buy your materials in bulk. Some of the entrepreneurs are talking about you've made a product in a certain fabric. You go back with the next order, they don't have the fabric anymore. So you need to have assurance by buying all of your materials up front. That costs a lot. That can come with a lot of different terms. And once you've bought this material, you don't know necessarily when that sale is going to come. So it's really matching the incomings and the outgoings and making sure that you don't take too much risk, essentially. The cash flow statement. Cash is really the lifeblood of a business. Because like I said before, profit does not equal cash. Especially when you work in a business that extends credit to people or gives people, so for example, like I was saying, if you're supplying a corporate or if you're supplying wholesale and they say they're going to take 60 days to pay you, you can record on your income statement that you've made a profit, but in your bank, you don't yet have anything. But you've got bills to pay, you've got salaries to pay, etc., etc. So that's where cash and lack of cash flow is what often constrains a lot of businesses. What you'll typically find is, and we'll go through a case study that sort of examines this. What you'll find is that gap, if you've got a gap in your cash flows, that's sort of the indicator of how much funding you need to raise. So for example, if you see that I'm making the profitability because I'm getting my orders and so on, but the timing of payment of those orders is a little bit delayed, and it's leaving me with a deficit every month. That deficit, maybe times 2, is the kind of funding that you need. Let's say it's a short-term debt from a bank, something like that. That's going to just sort of tide you over because you know the money is coming. It's just a little bit slower, and you need to make sure that you can keep your operations continuing and growing. So I'll stop here for any questions, any reflections, just to get a sense from the room. Are you at the stage of keeping accounts? How are you keeping track of your records, your sales, even if you're writing in a notebook, is there some way that you're keeping track of these things? You're keeping track?
So where's the mic? Just please remember when you have a
It's here.
conversation, we love to have those who are online participate. Thank you.
Thank you, first of all. So far, it's solidifying things and bringing other things like to light as well. I realized when I was raising that money that I mentioned earlier, I realized very quickly like that a lot of these things is what I would need. But I also am a creative, as you like. We don't really think about those things. We want to create, want to make things. So the best thing I could do for myself was to write everything down. I ordered some receipt books. So when I need to do things like this, I know I have a record of everything coming in. If I need to write something going out, I write it down as well, such that even if I can't do it myself, if I bring someone to help me, they have somewhere to start. They have the information is there.
Yeah. Record keeping is just so important. No one can believe your story if you don't have the evidence of it, and that's where it then comes in later about due diligence. You just have to show proof of all of these things that you say you have been doing. You say you've sold 100 units. Where are the invoices, the receipt books, etc.? If you're saying this is your cost of producing an item, where are the receipts or invoices from your suppliers? Where did you buy the materials? How much did it cost? Have you been also monitoring the change in the cost of your materials? Because in Zim, one day your fabric costs this much, tomorrow it costs that much, but you're still selling at the same price. Do you have enough margin to sustain that, or do you also need to increase your price? You need to know all of these numbers, and you need to keep your records as much as possible. I would say a starting point, start writing it down, as she said. Start keeping track of all of your receipts. Even take a photo, and you just know that I've got photos of all my receipts, and try at least on a weekly basis, and then on a monthly basis, consolidate all of that information in a way that can make sense. There's even templates, for basic accounting to say on a month-on-month basis, just put the stuff into an Excel if you've got a digital system, or even ask an accountant to say, how best can I keep my books or keep my records? Can you give me a template that I just fill in every month, and then it will do all the calculations for me, and I just keep it there? Because these things will come up later. I promise you, they will always come up. Looking now at the margins, I talked a lot about their importance and why gross margin is so key to investors. There's gross margin and then there's net margin, but people look at gross margin because a lot of different things can happen after you've sold the product, after you've made and sold the product. Investors already know a lot of different things can happen, and they usually, because they've seen a lot of the same types of businesses, they can optimize those things. So they don't always worry about the net margin. This net margin can be affected by how many people you are employing. Is it the best structure? Maybe you can cut some things, maybe you should add something, etc. So gross margin is really, really important. I think I already spoke about how you maximize your margin. If you're finding that your margins are not hitting sort of the benchmarks that you want, you either need to increase your price or you need to lower your costs. Maybe you need to negotiate with suppliers. Maybe you need to be able to become a bulk buyer, because a bulk buyer can often buy materials at a discounted price, or you can import for yourself if you're importing in bulk. Maybe you're importing rolls of fabric, for example. That can dramatically reduce your cost of production, for example, your cost of goods. When your pricing is too low, you can start by testing higher prices, work with branding experts, marketing experts, see how you can position so that you don't have to convince someone of the price. Someone buys into it based on how they feel about it, based on what you've educated them about your product. If you're pushing about the materials you use, if you're pushing about the craftsmanship and the expertise that you have, the uniqueness of the product, whatever it may be, the quality, etc., and you try and see how you can increase your pricing. And then again, because you will have looked at your unit economics to say, each category of product that I make here has different margins. Is this low margin product still worth making? Should I scrap it and just focus on what is a high margin product? Those are the decisions that keeping track of your financial position and your margins is going to allow you to now make, because you have an informed decision. Because you might like making something, but it might not be economically viable for you to make it, and you might need to stop making it because it's costing your business, for example. Those are some of the realities that then kind of show up when you have to stop being the visionary and stop being the operator and making hard decisions. So these are just some of your benchmarks. Luxury margins tend to be high, your 60 to 70%. You'll find a lot of luxury brands, they leverage the brand, right? The materials are the materials. A roll of cotton is a roll of cotton. But put Hermes on it, it's now super luxury, it's $1,000, you know. So that's why their margins tend to be very high. It's the way they've positioned themselves, it's how they produce, etc. Contemporary fashion, which I think a lot of you probably would be classified as, because you're making slower fashion. It's not a fast fashion type of business. Your margins would be to your 40 to 60%. But again, this is where you really have to educate your consumer, because you'll find a lot of consumers, yeah, they've got access to your Shein, you can go to South Africa, they've got a runner, they've got this and that. So it's really about educating them about what it is that you make and why it's important that they consider the uniqueness of that fashion, that product. And then with fast fashion, their margins are much lower, but they trade on high volumes. So Shein is making hundreds of thousands of the same thing. And those volumes are what compensate for how low their margins are. And that's why they also churn out so much, because every day they want to be pushing hundreds of new products every single day. And then with services where you're not necessarily selling a product, yeah, your margins can be up to 50%. It now just depends on how you manage your fixed costs, which is usually your human capital, because they're the ones providing the service. It's usually where you're operating from, the space. Are you optimizing? Are you in a space that's too big for your needs? Do you need to have no space and maybe higher venues for your trainings? People work remotely. What is it? You know, maybe you don't need to rent an office or building, something like that. Maybe you need to optimize in that sort of way. Maybe you don't need to buy a lot of equipment or machinery. Maybe you can rent on a piece-by-piece basis. All of these things contribute to your margin and where your margin sits. Question to the room. How many of you know your margins on your products? Are they in this sort of range, or is this now a reflection that you might need to go back and rethink something? Any experiences people want to share? And for those who are not doing their margins, how do you know you're making money? Why are you in business? Could we have the mic, please? Oh, yeah. Who's answering?
Morning, everyone. So I didn't know my margins for a big amount of time since I started my business. And then, I mean, it was as simple as just doing an Excel sheet that had the formula in it. So all my costs were in there, and then I just did the, times 45 at the end, and it made a huge difference. And before, I used to just kind of put myself in that fast fashion bracket because I wanted to compete with the second hand, and I wanted to compete with, the runners and stuff, as you said. And I was really shooting myself in the foot because I guess I didn't realize that they are, taking advantage of economies of scale, and they are, fast fashion. My tailors are paid fairly. I have certain overheads that they might not have, and I am operating in Zim, so that already makes a big difference. So yeah.
So when you figured out your margins or you calculated them, in what ways did it maybe change the way you were operating, or did it sort of, how did it make you rethink what you were doing?
Okay, so the first thing was obviously my customers noticed, or people that bought from me noticed, and it slowed down a little bit. And then the ones that do appreciate my product, started coming back more and saying things like, oh yeah, this makes sense. Some people actually came out and said, you were underpricing for a long time. And then what I realized is I needed to up my game quality-wise because I needed that price increase to make sense. And then, the last thing was it made me streamline how I do my business, because you can't be frivolous and just say, oh my god, I want to do this, and then you just kind of do it. I realized okay, I do need to cut my costs down, because you end up saying, oh, I'm gonna make do a margin of 70% just because you're trying to cover up, but then that's not the only way to fix that.
Right,
So I did reduce some costs, and then I did kind of streamline. That was the big thing.
Good,
Yeah.
good.
So a lot of the work that I do is project-based, and my margins fluctuate a lot depending on the project. So could you talk to us a bit about situations like that, where you're really working based on a project? So I may be passionate about a story and really love it, but the person only has X amount of money. And I will say, I will only work if my margins reach a certain limit. And then for a bigger project, I know that it'll be even higher, and it'll balance out in the long run for myself and the work that I do. So can you talk to us a bit about that?
I think you definitely, in the space that you're in, you have to have your baseline and be very clear what is your baseline to cover your costs. Because any project that you undertake, I don't know if you're doing it as a team, as an individual, and what's involved, but you want to account for your time. You need to know your hourly rate to say, how much does my time actually cost? Okay. You need to know, you need to factor in things like, let's say, transportation or utilities, even to say the electricity that I use when I'm on my laptop doing this, I have to pay for it. Even if you're working from home, you need to have a way of apportioning some of those bills to say these are work-related bills and these are my living costs. Because you're using your home as an office space. Those are baseline costs. Sometimes you can't take on a project if the margins are just not going to make sense. If you do your numbers and you say, this is my baseline, this is what I need on a month-on-month basis, or the money that's going to come from a project, this is how far it spreads across the months, covering my baseline. Maybe I know I've got a pipeline of 2 or 3 high, big projects that are going to cover and cushion the base. And so maybe I'll take this smaller project because it's all balancing out. But even with that smaller project, you also have to think, what is your end game? Are you just doing it just to say I've done a project? Or does this project have potential to go on further into something bigger? Maybe today they don't have a budget and it's a small project, but maybe if you establish that relationship, it can go on into bigger and bigger things. As they grow, you grow with them. So it's really a strategy decision, but it's also a real dollars and cents decision. You have to cover your costs, otherwise you're not in business. You can't clear your costs, you're not in business. Yeah, I think that's the most important thing. Definitely know your baseline numbers and price according to that. Yeah. What sort of margins do you experience in your business? Okay. Yeah. Yeah, if you can keep around your 50%, I think it will always keep you in a sort of healthy space where, especially because you're project-based, you're going to have certain drier months or periods than others. You need all of that income that has come in to be able to cushion you evenly across the time that you're maybe not working on a project. Any other questions or contributions? Okay. So I don't know if you guys know this company called Hanifa. It's a luxury fashion brand based in Canada. It was founded by a Congolese lady called Anifa Mvuemba. And the last couple of months, there's been a lot of, if you're on TikTok, there's been a lot of discourse around Hanifa and the challenges that they've been having. And I looked at this story and I thought to myself, this must be a working capital issue that she's facing. So Anifa started her business early 2010s, sort of 2012, and her brand is rooted in, fundamentally it started in luxury craft of knitwear. So she'd make beautiful, beautiful knit dresses, skirts, tops, all kinds of like really, really cool outfits. And she's gained a lot of traction. There's a lot of brand loyalty. People love the product. They appreciate the product. They buy at the price point. You know, it's high end, 400 to 1,000 plus. So all of these things are working in her favor. But now, for some reason, she's had a huge challenge with fulfillment of her orders. You'll find that with her, all of her, well, not all of it, but a lot of times when she drops a collection, it's on a pre-order basis, which indicates that she doesn't keep inventory. So she's essentially funding her business from customers paying in advance. So the customers pay, she then goes, gets some materials, gets some manufacturing happening, and then ships them 4 to 6 weeks later. The problem with that is in November, they did sort of like a Black Friday type of sale on a pre-order basis, and it crossed over into January, February. People hadn't received their orders, and now there's a lot of backlash online saying, you know, Black-owned businesses, they don't deliver, they're not efficient, they don't keep their promises, why is the shipping so delayed? People have paid a lot of money, they expect good service, good customer experience. So there was a quote, I was reading an article on Essence magazine, and they were saying the pre-order model works until it scales beyond production capacity. So a cult following grows until customer service teams are underwater, and a moment becomes a movement, and suddenly you're expected to operate like a conglomerate, but without conglomerate capital. So a Fashion Nova can drop a new collection and have tens of thousands of units available to go like this. As soon as they put the advert up, a customer can have that dress, that outfit, those shoes the next day. And if you're saying wait 4 to 8 weeks, you now are in a space where a lot of things are beyond your control when you don't have capital to fund or to pre-fund collections that you want to do. So ideally, you want to have enough capital to say, I'm launching a new collection. I already understand my volumes. These are the numbers we typically do every time we drop a collection. So I'm going to make 1,000 dresses, 1,000 pairs of jeans, 1,000 this, etc. So that as soon as we go online, we can start selling and shipping. Because you also want to take advantage of some impulse buys, right? A customer sometimes can come to you, and if you're on a pre-order or by order bespoke basis, they might not have the time to wait for your production time. Some of them are like, I need a dress tomorrow, an event has come up, and I want something nice to wear. You might be like, oh, it's going to take 2 weeks to turn around. You could lose that business. So a lot of entrepreneurs use that pre-funding model because they just don't have the finances to go and buy the materials to fulfill the order. That's where you now need working capital to go to a funder and say, I want to fund my production for my next collection. These are the typical numbers that I sell. I usually sell 100 units. This is how much money I need to get my fabrics, to get my thread, to fund the tailors who are going to make and produce the garments, etc., etc. And that's why I was saying, when you document, that really helps you tell that story now when you're looking for your working capital. So for Hanifa's story, right, she might want, let's say in her case, she might want to produce 100 dresses, right? That might require her to put in $40,000 or $50,000 that she doesn't have today. So what does she do? She pre-sells them, that revenue comes in, she takes that revenue to her suppliers, buys fabrics, takes them to the manufacturer starts producing. As soon as one of those things delays, it has a knock-on effect. And the brand that the customer sees is Hanifa. They don't know who made the garment, where it's coming from, why they delayed, etc., etc. And she's gotten to a point where I think yesterday she posted that she is thinking of just closing the brand because the scrutiny got to be too much. The backlash was too much. I think she had just had a baby in January when all of this stuff was blowing up. So definitely cash is such a lifeblood for any business. You just really need cash in order to be able to keep things moving. The other thing, I don't know exactly how her business is structured, but she is the visionary and she might potentially have an issue of poor teams and structures around to say, you do the designing, but the operational side, who's running it? If she's also trying to run it herself, while also being the creative, while also, that's where these things sort of break. Maybe it worked when you're doing 100 units, but now when you're doing thousands, 10,000, that model just starts to break and you end up being in the situation that she was in. So I don't know if there's any people in the room who have experience with that sort of pre-order type of model. How does it affect your sales? How does it work for you? Who's got the mic?
Good morning, everyone. So yeah, I've tried the model of pre-ordering. As you said before, there are some people who want to impulse buy.
Mm-hmm.
So you'll find that someone gets into your page, they see a bag, and they want to buy right there and there.
Mm.
But you tell them, no, you're going to get it next week. The impulse just changes.
Mm.
So I've realized that trying to keep some pieces in stock usually helps. You find someone who wants to buy right there and there and say, this is available, and it has worked well.
Sorry, can you just pause over there?
Oh.
So in my case, it was actually a business I was running last year. It was more of thrifting, according to order base, so personal thrifting.
Mm-hmm.
And it's a situation where someone wants a certain specific thing, and my job is to go and look for that thing. But where I was having an issue with that was someone wants a specific red coat. I have to go look for that specific red coat and to tell them that, okay, yes, you've given me the money to go and look for it. I might not find the specific red coat in your size, in the red that you want. And sometimes the way that it actually started was I was on my TikTok and I was just posting things, random finds I would find on TikTok. And sometimes I'd find a Gucci shoe and someone wants that Gucci shoe. And it's like, you're a size 6, I'm a size 4. So at first it was working. I did have a lot of clients coming in and I did run it for 4 months successfully. And then things started going downhill very quickly. And I just had to stop. I had to stop because I was now losing money instead of making money. I was giving out more refunds than actually money coming in. So I decided, let me stop, look for funding. If I'm going to do this thrifting thing, it's better I get some funding, curate, go on and curate pieces that are already there and open a shop.
Yeah. Okay. Sorry, just question on that. Did you know the margins you're making?
No, I did. I did not record a single thing.
Because the thing is, with your particular situation, because pre-ordering does work, it is just a practical way to get started and get some traction. But when you now document how many inquiries came where somebody said, is this readily available? No, it's not. And then it slipped away. That's information. Document how many of those do you get in a month? Because you can then go to someone and say, look at this. This is the missed business that I have. This is the business I do get and that went through and the sales, the revenue came through and everything. But this is the missed opportunity that didn't then come because of my timing. This is what people tend to look for. So for the lady who was thrifting, you can then say, oh, dresses do well, this does well, this does well. This is sort of the sizing. Usually it's people between size 10 and size 16, or it's people between size 14 and size 18 plus size, or whatever. And then you have information because, you know, it's coming to you for free, right? It's your inquiries, it's your social media, it's your audience. You can say, these are the people that I can reach. These are the inquiries I get. These are my price points. These are my margins. If you go to somebody with that information packaged, they can easily make a decision to say, oh, okay, I'll give you the money because I know how it's going to come back.
Okay. Hi. So my whole business is based off pre-orders. Our unique selling point is we make like this set that I'm wearing, for example, but we tailor it to your specific measurements because you might be a size 12, I might be a size 12, but you're bottom heavy or I'm top heavy. We want it tailored to meet your specifications and make you feel confident. So that works because people feel like, oh, we're getting an extra touch with every order that Riso does. But in terms of scaling, I don't see it scaling. It seems as if that model will continue to just be niche.
Are there not certain pieces, so for example, like the set you're wearing, not super fitted or super tailored, that a 12 to 14, 10 to 8 to 10 that could fit, right?
So,
and if you already know your margins are quite healthy, then you already know that this type of set or a kaftan or whatever, right? Typically, most people can find their size within my size range. And I've got a healthy enough margin that can cover the cost of a retail store. So let me make 10 units of each thing, open my shop, and I know sales are going to come. And you can still have your bespoke or tailoring service as an additional. But definitely for scaling, you have to find a way to make your products a bit more sort of fit in your generic price sizing and things like that. And certain, I guess, silhouettes work with maybe stretchier or breathe more looser fabrics, etc., etc. But then also, as you scale, again, document the information to say, this is how much a size 12 varies. This is how many inches, give or take, centimeters, give or take, that I've been seeing. So maybe I should price like that, or maybe height-wise. So I buy a lot of clothes from Nigerian brands, and I don't know if Nigerian women are very tall. Every single thing I order, I have to get reduced. So I'm like, how tall are these women? But, you know, so with that information, maybe for that market, it's suitable, but maybe for this, so all of that info, as much as you scale, gives you so much information to now create proper strategy.
Yeah.
Say, oh, okay, I've got data. What do I now do with this data? That informs the way I do my business. And yeah, and then getting funding that fits and matches the stage that you're at, then makes sense.
Yeah.
Yeah.
Thank you so much.
It's just one there and then over there.
Thank you. So I'm not from the fashion background, and I think I would like us to speak more broadly. And I'll give an example, or actually I'll give an observation of, I think what I've seen from when creatives then go and do models like this, like where you're saying pre-order, is it also not a case of creatives trying to be innovative to access financing?
Yeah.
Because I think that's the issue that we are really facing. You're coming from a space where, first of all, creative work, whether it's product or service or just even IP, is not really considered something bankable, which is where the big problem is. And I think that is what we need to come with our heads together. Otherwise, we'll continue to come up with models that get us into trouble. And a lot, and it hurts me because we see women come through our doors every day that will say, I tried this and it failed, now I'm going to be an SAID.
Okay.
Or I found a job in a shop where I'm selling diapers because at least I can have money every month.
Yeah.
And I think it really hurts, and I don't know what we need to do or how we think through how we can access financing. And sometimes it's also not, yes, I know numbers are everything as far as financiers are concerned, but also it's also quite expensive. I think we got fortunate because we had a bit of investment come in that we could then go in and invest into someone who knew operations and business development, like who came from that world, who was not an artist or a creative, and built a team around that, that are not creatives, but they understand the market and the business, and they've helped us create products that will then sell and keep our doors open. But it's not every artist who's going to be able to afford that. Already they're a one-man show. How are they going to be able to is there a way that we can garner that support? I don't know. I'm just trying to jog our minds so that we think outside of what often gets us into trouble.
Okay. So on that one, it's really about looking at the business as in terms of stages. So yes, for survival or to just get some momentum, you start off with that pre-order, you start off as a one-man band. And in that season or in that stage, that's where you're now validating how viable is this business. These sales that I'm getting, it's giving me an indication that a 30-year-old woman with so much income is willing to buy. How many other 30-year-old women with that income are there? Maybe I have potential. Right now I can't service all of them because I don't have the money, but at least I can see the potential, and I have the data because I've been recording it. That indicates that, you know what, if I have the money, I can now target 30 of those women with this, who fit this kind of profile. See, so it's about understanding the stage that you're at, and not aiming to sort of stay there. You usually then give up or break because you'll get to a point where it's no longer suitable. You're now supposed to be at the next stage, but you're still operating like you're starting out, for example. But the way you're going to get from stage A to stage B is going to be documenting everything. You might not be selling thousands of units, but you've got information on how you've sold hundreds or even 50 units. You've got information on how you sold it, how much it cost you, how much your margins are, where you're getting your supplies from, where your markets are, etc. When you put all of that information together, then you're able to then go and get money from somebody who can understand the story. From that money, you need to be clear to say, what am I using it for? Is it for building my team? This is how much an accountant costs. this is how much a production manager costs, this is how much whatever. But if I take those people on, and if the money that you give me increases my production or my revenue to this amount, I know for sure I can cover the cost of these people coming into the business. So ultimately, the numbers will tell you and tell an investor everything that you need to know about your business and the strategy that you're going to apply to it. Yeah. Sometimes if you need skills into your business and you can't afford to hire sometimes you can offer partnership. Say, is somebody willing to be a partner in this business? Again, you're going to have to convince them of the story to say, no, it's promising because of 1, 2, 3, 4, and 5. So even if you're not, you maybe not coming in full time and maybe not getting paid upfront, but this is where it's going. And there's evidence showing exactly where it's going. Someone can buy into that and say, you know what, 2-3 hours a week, I'll do your books. Because maybe I'll have a certain percentage of this business and I see where it's going. Those are kind of things you can think about. Yeah.
So when I first started out, I made most of my revenue through pre-orders, and it worked for a while. But then, as the business started picking up, the quality suffered, the customer service suffered, almost everything suffered, and so I found it more sustainable to stock my products in a few shops. But I'm getting less and less pre-orders, although I have come up with a structure in a way. So the reason why I did pre-orders was because sometimes I could have stock for up to a year that wouldn't sell, and then maybe the next year they would sell like a lot. So that's what happened to me.
Yeah, again, I think it's using that data as information to inform you and think about, okay, this product works or this product doesn't work. When I stock in a shop or a wholesaler, these are going to be my margins. So my strategy is to have 50% in stores for now. As people get to know and recognize my brand or whatever it is, I can now start taking back some of that margin because I'm selling direct to a customer. And you also have information from those stores, what's been selling to who, you know, what moves, what doesn't move, etc. And then you can now start targeting direct to consumer because your margin is going to be wider. So it's all just all of the experiences that you're cultivating is data that should inform your thinking, your strategy. I would hate people to quit the businesses, right? Unfortunately, people also need to survive, right? So we're competing with a lot of constraints. But sometimes sitting down with the information that you have, you can actually work out a way to make it work. Yeah.
Good morning. So when I started my fashion brand back in 2021, I did start with the pre-order model where I was initially, because I had a lot on my plate, I couldn't be doing the tailoring as well, even though I could. So I was working with independent tailors. And it worked for a while because people loved the idea and people were buying into the designs. These were creative designs. Until it got to a point where there was a lot of inconsistency with the quality, and sometimes the tailors would let me down, not show up, not be present, or just not deliver on time. And then I decided to move from that, and I engaged a manufacturing factory. But the only challenge now was they had a minimum order quantity of about 100. That's what they were willing to negotiate with. Otherwise, the standard minimum order quantity was about 500 plus. And the challenge with that now is having the finances and the funding to purchase that much stock and inventory at once and then store it. And then, because I think with fashion brands, in most cases, you're working with a collection that has maybe different pieces or different collections, and one product or one piece could sell or be liked by the audience more than the other. So it was a bit challenging, and I tried it for a while until I couldn't keep up with the orders, because even 100 orders of a certain piece, they were not moving as fast as the other pieces, and then I had to go and purchase, I had to go and get more supply of another piece, and it was just a lot. It was really messy. So I think that's also some of the challenges that come with the whole pre-order model.
Thanks for sharing. I think there's one here.
Thank you so much. In my experience, I've had pre-orders before, and we also sell ready-to-wear collection. So now the challenge is when you have something in stock, say you send pictures to a customer they want to buy, they'll say, can I have that maybe in red?
Right.
On red, so you have stock.
Yeah.
And now and pre-order now, what I've realized from my experience, I think as you grow, as the orders are coming in, you need to increase your price. That's my take. Say maybe you started off from $30. Now that you see you have lots of clients, lots of orders coming in, then your price has to increase, so that you, in other words, you're taking in what you're able to chew.
Are you saying that your price has to increase because your costs are increasing?
Your price has to increase so that it's demand.
Okay. I think that's now more of the business strategy.
I think so.
Decision to say how, because some customers are more sensitive than others. Some can absorb that price increase and say, oh, no, it's fine. Some will be like, no, I bought it because it was $30. Now why is it $50? So it really depends on what you're selling and how your brand is positioned in terms of how much power you have to switch your pricing. So it really, I think it depends business by business. But if you know your margin, I always keep harping on this. If you know your margin, you should have known at even your starting price that you're covering. So if you're able to increase, then it's just a plus. Yeah.
Sorry, this is in response to that. I think Zimbabwe is too fickle for that, because we're going to question why all of a sudden the price has changed, and we don't have enough consistency across different industries to do that. Like, most people come because of loyalty, right? So if you're not changing because there's no high demand, it's like, why? What's the reason, right? If it's a change that's, so for example, it's a $30 piece, and you change it to 35 because the fabric is more or the costs are now more, that makes sense. But if you change from 30 to 50, the question is like, okay, so are you now trying to make bank on us, or maintaining the quality makes sense. However, what's changed based on the numbers that are coming to get it? The material is still the same. You're still making the same thing. So how is more money going to help you maintain the quality? So you need to think about it like that. So if it's something like, say food, you're a caterer or something, it makes sense that the price is going up because you have to buy more to make the quantities more for the people that you're serving, right? But with something that's like fabric that doesn't change, unless the price of the actual fabric itself has changed, then that's a bit problematic, because I love buying local products, right? So I'm speaking from the perspective of, I wear local designs, actually wearing some now. But and I'm loyal to the designers I buy from, because it's like, I saw your piece, I loved it, I'm gonna come back for it. What will stop me from buying is quality and the finish and what it looks like, right? Because my mother's a fashion designer as well, so I have an eye for it. But if a designer then comes to me and says, oh, that piece you bought for $50 is now like 120 because a lot of people want it, I'm like, rather, the mistake we make is we want to make volumes on the margin instead of making volumes on numbers. You can actually make a lot more money by sticking to the price because more people are going to buy it. And so the money that you would make becomes more than if you increased your price. So if you think about it like that, there might be no need to make that change so drastically, because we also live in a very volatile economy. So when you then switch up like that instantly, you then tend to lose. But if you're okay with losing the loyal ones and continuing with the ones that are coming now, then great, no problem. But you have to think about these things because they have a long-term impact, which we always forget to focus on and think about before making such a decision. Just food for thought.
Yeah, it's a good point. And that's why I'm saying it really depends on your brand and your clientele. Maybe you have clientele that are not sensitive to that, they'll buy it at whatever price. But there are some clients who literally price is a big factor. And the reason why they were invested is because they thought they were getting value for the money that you were charging. But like, this is a great, yeah, sure.
Can you say something? So one thing I've realized with the clothing industry in Zimbabwe is when a lot of us start, we want to get people to get onto our brand, that we start with a very low price. And we don't factor in a lot of production costs. Like some people to this day don't even factor in mageti, like electricity that you use to make that product. You just think fabric, buttons, and probably my time. But what you are not factoring in, like I love, you keep saying document everything, because now I'm clicking like, there's a lot that I don't actually document. When you now start getting volumes, it's now, I can't handle, maybe I used to sew on my own, but now that I've got so many orders, I need to outsource. And the prices and the salaries I now need to pay are not factored in to the cost that I initially started with. That's why people then start increasing their prices. So I think when you start producing, let's say a collection, consider every single cost that could possibly come up. And a lot of people don't actually factor in their time. So when you factor, or when you do a pricing, you're not actually putting in your time. So if it took you 3 or 4 hours to make a product, you're not even factoring it into that pricing. So $30 or $15 is going to get a lot of people in the door, but it's going to kill you at the end of the day when the long term, when the volumes start. So I think pricing is where usually we have a blind spot, because we're so passionate about creating, we're so passionate about putting products out, but we're not treating it as a business.
And that's where it goes back to unit economics. What are the economics of producing that thing? If you know this dress has 60% margin from the onset, you already say, okay, if one day I need to hire a tailor to make these dresses, how much of this margin can I give up and still be profitable? Okay, my margin is going to go down to 50% or 40%, but at 40%, I'm still making it. So when the volumes increase, you need to start as you mean to continue and to go on. Don't just start just to say, let me just do something or whatever. Start with an end in mind. You might not know the exact end, but an end to say, okay, one day maybe I want to have a shop. How much are rentals these days? How many dresses? Once I start selling X amount of dresses, I'll be able to cover rent for a shop. Now you already know, as you're building and producing that, okay, we're going towards that. And the traction that I'm making is already telling me that I'm almost ready for the next stage and the next stage and the next stage.
Yeah. I wanted to add to what she said. So I've helped my mother resuscitate her fashion brand. And one of the things that we had to put down in the costing is, so I remember you said you do everything, right? But when you're costing, have you factored in that you've got a designer that you need to pay, you've got a pattern maker that you need to pay, you've got the tailor, you've got, when it comes to the other costs, you've got airtime, that texting, that calling, that whatever on Instagram, the delivery fee, whether you deliver or not, put in a delivery fee. And all these are like your fixed costs that when you're now then working on the margin, you've included all these things so that if you do scale up, you at least have some of these things covered. However, I shan't take any more time. Come to the session on Friday at 2 o'clock and we'll talk more about it, because that's exactly what I'm talking about.
So thank you so much. So I didn't explain that in my business we have 2 lines, custom made and ready to wear collection. So for the custom made, we realized as a tailor, we wanted to change the narrative around tailors. So how was I supposed to do? So I thought, okay, let me increase our prices that side, so that we'll screen
the type of clients,
that we need.
That's also a business strategy decision.
So for the other line, the ready to wear, our prices, it's like they are not, it's not pricey, but we've tried to maintain, and our margins for the ready-to-wear collections are about 42%.
Okay, that's not too bad. That's quite good. Yeah. Yeah. Or you could just keep it on the table.
Sounds like I'm not buying.
It's not how you tell the story.
Yeah.
Right now it's like it's tailor-made, it's custom.
It's a custom-made.
So
Yeah.
you're paying for that.
Some people have leeway. I mean, if we look at the price of bread, when bread went above $1 back in 2000, there were riots, right? Because there's certain products that can increase the price and people will be fine. Certain products that can literally cause people to go to the streets and march. So it really you have to really know that, okay, if I'm short selling myself right now at the beginning because I just want to start, factor in how much power do I have to change what I'm saying today, tomorrow, and will my customers understand? And it depends. It really depends on your business. It's a case by case type of thing. Okay. So, thank you so much for that discussion. I think it always helps to share experiences and stories, what people are encountering. I'm hoping it helps you sort of reflect and just think about what you're doing, what you might do differently, maybe certain things that you had shelved, maybe you can revisit them with a different understanding or a different approach that you'll take. So now we'll move on to the going to market part of things. Going to market, whether you're raising $5,000, $100,000, $1 million, $10 million, it's pretty much the same process. Investors pretty much want to see exactly the same thing. So with pitching, there are 6 particular things that an investor wants to understand about your business. They want to know the problem. They want to know the solution that you're providing through your business. They want to know the market size. They want to know the traction. They want to see the financials. They want to know what you're asking for, right? So with the problem, it doesn't have to be like, we're trying to change the entire world. It could just be sizing is a problem for certain women. It could be a certain aesthetic, maybe modest dressing. There are not enough options. It could be maternity, like your clientele. They want something that they can continue wearing, something that's practical for nursing, pregnancy, and beyond. For you with dialysis patients, there's certain practical problems that they're facing. And then you say, for me, specifically with my brand, I am creating this solution. And explain why your solution is better than the alternatives. It's better than Shein because the quality, but it's better than Shein because you don't have to have a runner, you don't have to wait. You can come into my store, it's readily available. It's better than the alternative because it's natural materials, it's linen, it's 100% cotton, it's not polyester, etc. Then you look at the market size. We already discussed TAM, SAM, SOM. What is the size of the market? Who are they? You should be able to, you can look up SimStats, literally the census. It tells you the ages, how many people are in different age demographics, how many people are in different cities, are they urban, rural, what age, what sort of income. I think the census does give you income, etc. All of that is data that you have to present to an investor. And it's also data that's going to inform your strategy to say, for the people that I target, there's actually, like, let's say you say, my brand's Instagram page has 1,000 people or 10,000 people. That's actually not the market. That's just a bubble. The market could be much bigger, and they're not just on Instagram. Maybe they're on Facebook. Maybe they're on TikTok. Maybe it's word of mouth. Maybe it's this and it's that. Your Instagram might be a sample of a potential market. That gives you an indication. So now when you take that sample and say, okay, the people who follow me on Instagram or follow my brand or tend to buy, they are typically 25 to 40 years old. Go to the census. How many 25 to 40-year-old women are there in Harare? What are their income ranges? And then craft your strategy around that to say, okay, there's a lot of people I'm not actually reaching, and I'm not even making an effort to grab them because I'm focusing on this niche, for example. The market size is really, really important. It's important about, as we already discussed, who exactly you're targeting and on what basis, and what's the potential for tomorrow. Today, you've got so many. How many more have you not yet tapped into, have you not yet reached? That's what really shows your growth story, to say, I increase my sales or whatever, the way it's been going, it can double, it can triple, it can whatever, because there's so many people available for this product. Traction, again, what have you been recording? Your revenue numbers over the past 6 months, the past year, what has been changing and why? Is there a seasonality to your business? Is it better in December? Why? Who does it resonate with? What are their patterns for buying? Your customer count. How many are brand new customers? How many come back? Why do they come back? How many times do they come back? Is it they try something and then they want the same thing in different colors, or they now want other things that you offer, etc. Proof is always going to be better than promises. Every single thing that you tell an investor in your proposal, your application, your pitch, they might be sold on the pitch and say, let's talk, I want to hear more. They're going to ask you for the proof of every single statement that you have made. If you said, this is my addressable market, they're going to ask you in the due diligence, show me your source. Zimstats, this is the census, this is my proof. It's not just a thumbs suck. If you say, I've sold so many units, where are the records? Where were these orders? Were they in Harare, are they in other cities, etc.? How is it fitting into the story that you're telling? And then your financials, as much as possible, while you're documenting, try and put this information into monthly statements that then can feed into annual statements. Any formal investor, and by investors I mean they could be banks, they could be microfinance, they could be individuals, funds, they could be corporates, whatever it may be, they're going to look for this information. So the sooner that you can start, the more ready you will be. You don't want to wait until you're in crisis and now start trying to put your accounts together, because they're going to ask for a track record. It might not be 3 years, because you could say, I've been in business for 12 months, but I've got documented traction of those 12 months and how my business has been looking. And this is how it's informing how I see my next 12 months, 2 years, 3 years going forward, right? So in terms of your ask, it's now saying, I want this specific amount of money, and this is what I'm going to use it for. And the numbers that you've put together should make your ask make sense. If you say, I need 12-month money, it's a short-term loan for my working capital. They'll say, okay, explain your working capital cycle. You say, no, I buy material, fabric, from the day that I buy fabric to the day the garment is made and sold and the money is in my hand, there's 15 days, or there's 30 days, or there's 60 days. So in those days, I have a deficit of X amount of money. Therefore, I need working capital. So someone can properly see exactly where the money is going to go to. If you're just saying, I want to grow, and I think I need 50,000, it's just going to be for growing. They're going to say, your story isn't making sense. What exactly is going to make it grow? Is it the materials? Is it that you want a piece of equipment? Is it a sewing machine? Is it a new space? Is it a shop? What exactly are you going to use this money for? And your numbers are going to tell the story that makes that ask make sense. Okay. So in this 6 things, and it doesn't even have to be super extensive. With a lot of banks and so on, they'll usually even give you a template to say, we just want to see your business plan, and you need to have these sections in this order, and you put it together. But ultimately, you should be able to tell your brand story in like 10 minutes to anyone. This is the problem I solve. This is the problem I noticed. This is the solution I create. This is the market size. This is the traction. And I'm making certain margins, etc., etc. And this is the amount of money I need for my next stage. To be able to articulate that to someone off the top of your head, hopefully. Now, in terms of due diligence, like I said, every single thing you've told an investor, they're going to ask you to verify it with credible information. And they usually split a due diligence into your financial, your legal, your operational, and if you have any sort of special IP, branding, and so on, they'll also want to look into that. So your financial due diligence will always look at financial statements. As a small business, you can literally just have an accountant look over your business and sign and say, these are credible. You know what I mean? You don't have to have a full-on audit when you're still starting out. But have your financial statements, have bank statements. If you're going to look for money from a bank, for example, they will ask you for a track record of business that you've been. They want to see your accounts, what comes in, what goes out, what comes in, what goes out. And I know we work in a very sort of cash economy. So those financial statements and those bank statements together tell a story that makes an investor comfortable. They will look at, formal investors will look at things like your tax clearances, your tax registration, are you up to date with those filings, et cetera, so that is really important. They will also look at what we call accounts receivable and accounts payable. The accounts receivable now is if you extend credit to your buyers. So accounts receivable is what you've got on record to say, money, I've sold this product and the money is due to come. And this is how much I'm still waiting on coming, and this is how long I've been waiting for it to come. So sometimes they'll say, how much have you been waiting on for 30 days? How much for 60 days? How much for 90 days? When it starts getting really long, that's when they're like, why aren't you able to collect your money? What's going on? Are you doing too much business that's risky, that doesn't then pay back, and what's happening? But that usually comes when you're now operating at a much higher scale. And then with accounts payable, it's the opposite. It's now, who do you owe and how long have you been owing them, and how much is it? That's what they will look at. And then your inventory, if you have any, they'll say how much are you holding, be it in your materials that will be converted into products, or be it finished products that you are waiting to sell. When they're looking now at the legal side of things, they want to know, what are your business registration documents? Are you formalized? Who is part of this business? Is it just you? Do you have other shareholders? Are you up to date with all of the necessary registrations that you're supposed to have with statutory bodies, et cetera? Sometimes they also want to see that there's more than one person in a business. You can be a solo business owner, but sometimes certain investors find comfort if they know that there's other people also in the business sharing the risk. Yeah, when you now get to larger scale or different types of things, they now want to look at your shareholder agreements. They want to look at your major contracts. So if you're saying, I supply someone 100 units a month, they want to look at that contract to say, is this a contract that's like the buyer can take or not take? Is it a contract that's fixed for a year, 2 years, 3 years? What does that contract say? The better the contract, the more comfort an investor is gonna have, because it shows that, oh, okay, these volumes that she's been doing, at a bare minimum, there's actually a contract or two that says for sure every month somebody's buying at least 10 of these things or 100 of these things or whatever it may be. And the same with your suppliers. They want to know, if you want to go and replenish your materials, are you going to find the same fabric again? Is that supplier bound to provide you with your materials that you need on a periodic basis, for example, so that you know for sure tomorrow you won't be like, oh, this dress that was selling well, we're not selling it anymore because the supplier couldn't come through, etc., etc. So they do look into certain things like that. And then operations wise, they want to see your customers, your revenue by customers, your repeat purchase customers. They also want to look at your organizational chart. Who is in your team? What are their skills? What are they responsible for? And yeah, what are their qualifications for doing that job? They also might now look at your technology stack. So a lot of people look at tech-enabled businesses to say, you're not just in a brick and mortar shop, You have some sort of way people can shop online. You fulfill it through bikers or whatever means that you use to get to them. A lot of investors are now interested in how you do that. It can be as simple as you do it in a WhatsApp catalog. It can be as simple as, or you can maybe have an app, whatever it may be, that just shows that you're not constrained to a physical space. You can reach any customer as long as there's a courier that can get it to them. And then with IP or branding, if there's something very unique about your business with IP, they'll want to know that if you own a copyright, that you've actually registered it. Someone can't come and take that thing. You've actually done your homework and you've secured you've secured your IP and your copyright. That's very, very important. Even websites, you actually own the domain for your website. Let's say you say you want to become an international brand, etc., but somebody else owns xyzfashions.com. Now what are we going to do? How are we going to become an international online retail company? You don't own your name or your brand, for example. So those are some of those things. And as I said, you don't want to start doing or preparing this information when you're looking for money. Start now. Document it, keep your records, so that the day you now want to look for money, you're now just putting all of that information together and packaging it, ready to go for someone in 48 hours, and provide them with a list of things they need, and not being like, oh, I have to start documenting. If you're starting documenting, you need at least 6 months to a year before somebody can say, okay, you've got enough information or enough solid data that can give me confidence to give you money. So documentation is super, super important. So now, the types of capital that we have in Zimbabwe, or just typically, but I'll talk about the sources specifically in Zimbabwe and how they sort of operate. So your first layer of capital is typically debt. So this is money that somebody gives you and they want it back in a specific period of time with a specific amount on top. That's the interest that they've charged you, right? That's debt. That's usually best for when once your working capital or your equipment financing, your inventory and so on. It's sort of money that you don't need on a very, very long-term basis, or it's not an amount where you necessarily need to give up some of the ownership of your business. Your business is viable enough to say, I can take this money, use it, make enough to pay it all back, plus the amount on top that they require. So sources for debt, typically in Zim, you'll have your commercial banks. You also have microfinance institutions, you have cooperatives, you have development finance institutions as well. You'll find for banks, sometimes they might not do smaller amounts. They might want, and they're also bound by a lot of regulation that there's certain business that they just cannot take, even if they believe in you. For example, they have to have a physical property, title deeds, that you provide them for them to fund you. Without that, they're not able to lend to you. So those are the type of funders who typically work best for corporates and so on. You'll find that a lot of SMEs or small businesses then will typically go to microfinance institutions. But the tricky thing with microfinance now is they're very, very expensive. So they can charge you monthly what a bank might charge yearly. So microfinance is really for something very short term, 3 to 6 months. You know specifically that you're funding for maybe a big order, and the revenue is definitely guaranteed, your margins are guaranteed, etc. That's when you can look into microfinance. But yeah, you need to be really careful with that. But you can also go to other sort of concessionary funders, like people who have a specific interest in funding, let's say creative enterprise, in funding women, in funding small businesses. So they'll have lower interest rates, you might have lower requirements, they might just say, okay, pay us a percentage of your, or the repayments that you're going to give us will be a percentage of your revenue, which is why that gross margin again matters a lot. Say, how much of that margin will it take up? And can you survive it for 6 months, for a year? Because it's benefiting your business in another way. Okay, so the next type of capital is equity. So this is now when somebody gives you money and you don't pay it back. But what you do give them is a percentage of your business. And the reason why they're giving you the money is because they believe that, okay, so when they give you the money, you don't have to pay it back. Where they get their money back and a bit on top is from maybe the profitability that your business is going to make. And from those profits, you have to share those profits with them because they are a partner or shareholder in your business. Equity investors typically have a long-term view, something like 5, 6, 7 years plus in your business. And you have different kinds of equity investors. You can have individuals who are angel investors. This could be family and friends who are like, you know, believe in your vision and what you're doing. I can give you 1,000 or 2. When you have it, when you do well, we'll all do well. So we're behind you. You have some people who are especially interested in certain businesses, either because maybe they're a bigger player already in the industry that you work in, and they want something specific that you do to be incorporated or to have access to what you do that they don't maybe focus on full time. So an example I can give is maybe a wine maker. Maybe a winemaker says, our core business is making wines and so on. We do great, we do all kinds of wines, etc. But we want some exposure or insight into restaurant businesses. We're gonna buy some part of a restaurant business. We're not interested in running it full time or whatever. We'll just be a shareholder in it, but these people will run it and we will stand to benefit because maybe we can supply our wines through that restaurant, we can be a buyer. It'll just be another source of income and growth for us. So you can have certain investors, we call them special interest investors, who have a specific reason why they're attracted to your company. You also have private equity funds. Private equity funds, they are people who will buy a percentage in your company because your company is set to grow maybe 5 times in the next 10 years. It'll be 5 times its size. They will buy equity, but they want at year 10 to leave that company. So they'll probably sell the ownership that they have back to you if you have the money to buy it back, or to another investor, and then they move on. So that's also private equity. And firm and finance institutions also do that kind of stuff. So the trade-off with that is sometimes you give up ownership. Sometimes those people who are investors and they've bought in, they want a say in how you're operating, how you're doing the things you're doing, the decisions you're making. Maybe they, you know, at the end of the year, you've got a profit and you say, I want to buy another machine. They might say, no, I don't see the need for a machine. Let's just share this money and continue doing what you're doing. As you're doing, it's working. Why do you want to change it? I just want money. You know what I mean? So you also have to think about who you take on, because you have other voices now in the business. Other voices can be good. They can keep you accountable. They can come in with something that you're lacking, right? They might have experience in scaling businesses before, so they'll also be able to give you advice and guidance and help, essentially for free, that you're not necessarily paying for because they're invested in the business. So sometimes other voices can help, sometimes they can be a challenge. So you have to really know and understand who you're getting into bed with. And then you have the third type of capital, which is quasi-equity, which is typically what banks are not able to do. So then now you'll have people who maybe will look at early stage businesses, the missing middle type of businesses, and say, okay, I'm going to give you this money. I'm not buying into the business. I'm going to give you this money at a cheaper rate or a cheaper interest rate because that's my bare minimum that I want back. But when you do make profit, I also want like 10% of that profit because I've discounted you on the cost of the debt. So I also want to make up the difference from part of your profit that you then make down the line. And that's usually fixed. There's a certain date where you pay it all back, and then that's the end of the relationship, and you move on. So, yeah, that's the sort of capital landscape. I think another one I didn't put here that might help with people who are producing at scale is invoice discounting. So again, I think the lady here was talking about when you have a minimum order quantity from your manufacturer and you have a buyer, but maybe the timing is not matching. So you can take your contract with the buyer and say, this buyer says he wants to buy 100 units. When they're ready, he can't pre-fund me. He says, well, as soon as they're ready, he'll pay me my money, or within 30 days, he'll pay me. My supplier, though, needs money today. You can go to financiers. There's a company called Harare Receivables Exchange. You go to them with that contract, and you go to them with the invoice from your supplier. They might give the supplier the money that he's asking for, and then give you the money that you're expecting, but at a discounted rate. So they say, we've paid your supplier and he's going to produce. So we're going to pay you now, but we're going to pay you 80% of the value of the contract, while we now take on the risk of waiting for the buyer to pay us for the product once it's finally done. You have your cash today, and they are now taking the risk of waiting for the cash that will come in 30 days. So for that, they'll charge you, let's say, 20% of the invoice, something like that. That's something that is also a type of financing that you can access, especially if you know for sure what your receivables will be and what your obligations or your payables are today. You can work with companies that do that. Now, I will take you through the forecast tool. Let me just open that. Are there any questions or any points of reflection on this? On the going to market? Okay, it's Harare Receivables Exchange. You can also look into African Century. Sometimes they do things like African Century definitely do lease financing. So for example, maybe you want to buy a machine, they'll buy it for you, and then you almost rent to buy over a certain period of time. They do that as well. Like let's say you're importing a machine from somewhere, they also do that as an alternative type. And then some microfinances, you can just ask them, do you do invoice discounting as a product? Some microfinance houses do offer that as well. For a question? Oh, can you use the mic?
In your experience, have any clothing brands or people in the fashion industry actually received funding in Zimbabwe?
Not specifically in terms of what I do. I have a different sector exposure. But I do know of businesses that have, let's say I know there was a brand that was supplying like Edgar's, for example, on a wholesale basis. And they did use that invoice discounting type of thing. Yeah, I'm not too sure, but I'm sure they are. I'm sure they are, because it all fundamentally comes down to the business case and the numbers. If they're viable enough, you usually can. I think the biggest constraint will be, especially for formal funding if they require security. Some people don't have a house or title deeds to put up, for example. That can be a big hindrance. Or it could be the amount that they want maybe doesn't match with a bank, for example. What else? Or just the interest rates may be just too high. Yeah. Now, this is a GPT in ChatGPT that I created that should allow you, even without an accounting background, to at least put certain assumptions in, and it should be able to provide you at least with your annual forecasts. It can do 3 to 5 year forecasts. Okay, so I'm going to try and demo, and we can sort of walk through together. So here it just has some prompts already built in, but you can, put in whatever it is. So I'm just going to select here, can you build a 3-year forecast for my fashion brand? Just click on there. And you should be able to do this even on a free ChatGPT account. I think the link will be provided by the organizers after the event so that you can check it out and try using it. So it just welcomes you to the GPT, tells you what it can produce, income statement, cash flow, balance sheet, a metrics dashboard. It can also suggest how much funding you require, and it can give you some scenario analysis. So it asks you the first questions. Say, what's your brand name? What's the business model? What stage are you at? And what horizon are you looking at, right? So what I typically do is I just copy this information that it's asked me. I paste it into the thing there. So can we use like a real life, who wants to volunteer their business? Okay. Do you want to volunteer? Just give us the scenario. So your business name, you can pass him the mic. Both, yeah.
So we're starting with the brand name, confirm?
Yeah.
By Bakari, Bybakari.
Okay. And then the business model, are you direct to consumer, e-commerce?
Yes, direct to
retail?
consumer.
You have retail space?
Yes, I do.
So retail and e-commerce. So I'll just delete the ones that don't apply. So retail and e-commerce. Do you do any wholesale?
No.
No. Okay. What stage are you at? Are you idea stage, pre-launch, early revenue, scaling?
Scaling.
Scaling. So again, just delete the ones that don't apply. And then 3-year forecast is what we'll work with. Okay, so now step 2. It will now need you to sort of give a breakdown of your categories. Let's say I have dresses, tops, jeans, jackets, whatever it is that you do sell, right? So it's given a table here already of an example of how you'd break that down. And for each category, you just want to know at least the general. I mean, you can get as specific as you want, but you want to know the general selling price for dresses. What's the average? What's your average cost to produce those dresses? How many units do you think you'll sell in your first year? Or starting from this year, let's say. Okay. So let me copy that. It also then asks you, how much do you think you might grow in the next year, like your year 2 and your year 3? But I'll start with just the categories. So what kind of products do you sell? Or what product lines do you have?
It's ready to wear.
Mm-hmm.
I have ready to wear and accessories.
Okay. So in the ready to wear, is it like jackets?
Yes,
jeans?
jackets, shorts, pants, shirts.
Okay, so let's do shirts here. What's sort of your average price point for shirts?
$30.
$30, and your price to make it, or your cost to produce that?
It's about $12.
Do you have an estimated, or maybe let's keep the units that it's suggesting here. Let's just say that's what we're going to be looking at. So jeans, your price, your average selling price?
Let's do shorts, no
Oh,
jeans.
shorts, okay. Mm-hmm.
$15.
And your cost to produce?
$4.
Then jackets?
Jackets are $30.
Your cost?
$14.
Then accessories?
$35.
And the cost?
$17.
Okay, so it's already calculated now based on what you've inputted, right? And the units that we put there. It's then calculated the revenue for each of those line items and the cost of goods to produce, the cost of producing those goods. And your gross profit is there, and your margin 56%. So it's already tell you've got a strong margin, healthy for a fashion brand. Now we look at the next set of prompts. It's asking about sales growth, and it's asking about operating costs. I hope this is sort of making sense. I hope it's easy to follow. Because it's small. I'm not sure how to zoom. Okay, so let's assume in next year you're going to grow by 40%. The year after that, you'll grow by 35%. Maybe your growth will just start sort of stabilizing. Those assumptions will keep. And now your expenses. Do you have a rough estimate of how much you use for marketing or advertising? Either monthly or annually?
Let's say $50.
$50 a month. Do you have any costs for like websites or platforms that you use, tech platforms, anything?
Not at the moment.
Just put 0 there. Do you, your retail space, how much rent do you pay?
$250.
$250 a month. Shipping and logistics, either for getting your materials, or if you're delivering somewhere, do you pay?
So when delivering, I usually charge the client extra for courier.
Mhm.
So I don't know if I can factor that in.
Do they pay the total courier cost, or are you sharing some of the cost?
They pay the
it
total,
all.
yeah.
Okay, so it's, but when you are getting your supplies, you're not paying anything.
I do.
How much would you estimate?
So now that's a bit tricky because there are months where I get my fabrics from out of Zimbabwe.
Mm.
Then there are times where I get most of my fabric in Zimbabwe. So yeah.
On average, for the stuff that you're producing, how much might a runner cost you? Let's say if you're importing. We'll use the worst case.
Let's put it $200.
$200.
Get it from Ghana.
$200 a month. We don't have software. Do you have any other sort of admin costs outside of your employees or anything like that?
Not really.
We'll put that at 0. And then now for salaries, for yourself, how much do you pay yourself monthly? Or how much would you like to pay yourself
500
a month?
I would like to pay myself.
And then do you have a team of employees, people that you have to pay?
Yes.
How much do they cost you
600
a month? And then any other operating costs, like things like electricity, airtime.
Yeah, they
anything like that, internet.
Let's put 100.
$100. Okay. How much starting cash? How much cash would you say you have in your business currently?
I have no idea.
No. Okay. We'll just put 0 for now. Assume there's no starting cash. Okay, so I know it's small, so maybe you can't read it, but basically all of the questions I've been asking him, I've been putting the answers there, and the generator then incorporates all of them and is creating the financial statements. So it's already created assumptions for revenue drivers, say revenue drivers, growth drivers, the annual cost of actually running the business, the salaries, how much those cost, etc. And it's incorporated them all into your income statement based on the assumptions that we put in, right? So it calculates all the way from the revenue to say from all of the products that you create, that you produce, be it shirts, shorts, jackets, accessories. If you are making 1,000 units of shirts, 2,000 shorts, 600 jackets, 3,000 accessories in a year, at these prices based on this cost to produce it, what does that look like? And then when we apply a growth rate, let's say by year 2, it'll be up 40%, year 3, it'll be up another 35%. What does that then look like? It then also looks at the costs that we did monthly, put them into annuals. So your marketing, it put at 600, your rentals, 3,000, your shipping, 2.4, 0 for website, 0 for admin. Moment. Then your salary is 6,000 for the founder, 7.2 for the staff, and 1.2 for your operations. The other operations like utilities, that kind of stuff. So it has calculated our gross. It's calculated your revenue across the years and how it's going to increase. So in year 1, based on our assumptions, you would make 183,000. In year 2, with 40% growth, you'd make 256,000. In year 3, you'd make 345,000. And the cost of producing that and your gross profit at the end of it. It then looks at your operating expenses that we plugged in, and they come up to year 1. So the projection now then shows your gross profit and how it's going to change over the 3 years. Your operating expenses, they're staying flat. And then your sort of operating profit, what it is, and then if we assume 20% tax, this is your net profit that's going to be left. It then does the same to calculate your cash flow based on your net income that's coming from the income statement. You don't have any capex, you're not buying equipment or anything. And then it estimates the working capital that you'll need. So it's saying in year 1, to achieve what we've set up there, you need $10,000. You'd need to apply for a $10,000 loan or go and ask for an investor for $10,000 to keep. That's what it's sort of recommending for you. And then it's saying in year 2, you'd probably need to up that to 15,000 and year 3 to 20,000. And then it also does a simplified balance sheet. And then it's got your key metrics there to say your gross margin is 56%, your operating margin is 45%, around there. So this would be a very healthy business. It also then gives you your break-even analysis to say how much revenue do you need on an annual basis to at least just cover your costs of existing. And it's saying that you would need at least 36,000 to cover your production and everything like that. Yeah, so again, the estimated working capital you need is 10 to 20,000. A recommended be short-term working capital. Either best option is the founder puts the capital, or you get inventory financing. And yeah, that's basically it. So after you've done all of this,
I don't know if you had talked about it. There's where you mentioned it's called inventory. Can you go down a bit? Inventory financing. How does that work?
So basically what this is saying is your projections are showing that you're going to make really good sales, and then the cost of producing those products is a very strong margin. So inventory financing is now you're going to someone to say, for whatever reason, the evidence I have suggests that this is the amount of volume I'm going to do this year. I don't want to do it on a pre-order basis. I need funding to buy my fabrics and materials and craft these products because the retail side is ready to fly. Yeah, it's basically that. So it also gives you some observations. So it says that accessories drive 57% of revenue, so you should consider expanding that category. It says that jackets have a lower margin, so you should evaluate your pricing or your production cost. It says your marketing budget is low, so you should increase your ads dramatically to increase your sales. At the end of that, it then says it's now ready to generate the Excel model. So you can just copy that word, the wording there, paste it. And it will convert it into a basic Excel. This is a basic Excel that will give you the information you need in order to think about your strategy, think about your operations, what you might need to do better or might need to adjust. You should be able to take it to someone with a financial background who can then advise you as well to say, okay, what your numbers are saying, this is what can work or what not, etc., etc. So it's sort of just like a very basic way to get some numbers that can make sense for somebody who might not necessarily have a financial background. So then you just, when the file is ready, download it. It says there by Bakari, 3-year financial model. So there, it's put all of the things that we had given it, the assumptions, and it's put them here to say, we said shirt price is $30, the shirt cost is $12, the shirts units, we said 1,000 in the first year, etc. for the shorts, the jackets, accessories. It also put the assumption on the growth rate and percentage. And then your fixed cost, your marketing, your rent, your shipping, salaries, etc. The next tab now, it then shows your income statement. Calculated it for you there. You have your revenue, your cost of goods, your gross profit. You've got all of your fixed expenses or fixed costs, totals them, and it gives you your operating. EBIT is earnings before interest and tax. So that's sort of like a operating profit, in other words. And then your tax, just assume 20%, but sometimes you might need to prompt it with what actual corporate tax is in Zim, or you can add other taxes that you consider, like your IMTT, things like that. You can factor it in and ask it to factor it in. And then it gives you your net profit at the end of it. It also gives you a basic cash flow statement, your net income, your changes in working capital, where your money will come from, etc., etc. And yeah, And then the balance sheet, again, it does that for you as well. And then it gives you a few of your metrics to say your gross margin, where your revenue will be by year 3, and your profit, and what your break-even revenue is. Yeah.
Okay.
that's the
So thank you so much for all that. But I wanted to find out a couple questions here from our group, just for context when it comes to designers. Is there a way or avenues that we can use specifically as designers to try and attract investors? I don't know if you can help on that.
I think really it's about that readiness. That readiness now allows you to approach different types of investors, because you need to know exactly what your business can do and what your business can deliver from a financial perspective, right? Once you're very clear on that picture, now you can say, okay, the kind of funding I need, I only need it for 6 months, or I only need it for 12 months, and this is the amount that I need. What kind of funder gives that kind of money? So you're now matching your story with the person it will appeal to. So you say, do I need to go to a microfinance? Do I need to go to a bank? Do I need to go to a rich individual? You know, a lot of people have money and they don't have a lot of investment options. If you go to them and say, listen, in 6 months, I can come back to you with 10%, with your money back plus 10%. They might say, oh, you know what, cool, or 15% or 20% or whatever. But you'll only be able to know that when you have a clear picture of your numbers. Yeah.
Hi. So I feel like the fashion industry is a really hard place to gain investment or like to attract investors from. And I think that was the question I picked to Bakari to try and ask you. How do we actually pitch to a rich person and, you know, give them assurance that their money is going to come back, the ROI is going to come back tenfold or whatever it is, because it's something that in Zimbabwe they don't really believe in. They would rather believe in maybe in construction or something that is, you know, being done on a regular basis. So what maybe he's trying to say is, how do we actually attract these people or get their attention to actually look to us and say, okay, the fashion industry, the material business is actually good money? Because I think the richest person right now, or the second richest person right now in the world, is Bernard Arnault, and he's in fashion and luxury. So I think Zimbabwe needs to make a footprint, but the investors, the people that do have the money, don't believe in us. So how do we get them to believe in us?
Okay, some of the fundamentals of investing is you need to invest in what you understand. So investor might say, you know what, I don't understand the fashion business. What I do understand is construction, because I've been doing it. Or I understand farming because I've been doing it. But it really does come down to a good investor looks at the numbers and will compare one case with another. If fashion can deliver margins of 60% and bread can only deliver 10%, they're going to look at the fashion business. But I think there might just not be an understanding of what fashion businesses can do. How have you packaged the story? And what is backing your story? Do you have the data? Do you actually have proof of what you're saying? Because it really does come down to the numbers. Yes, there are some people who invest for the story as well. That's usually an added, to be like, oh, you know what, this thing, not only does it bring back more money than if I were to put it in a bank, or if I were to put it in, even in property. Property is not a very good investment, but it's just what is available that people understand. If you can go to them and say, I have actually got the information, I've got my data, this is as much of assurance I can give you that this is what this business returns. somebody can then look at it and invest. So some people might say, okay, it returns more than if I were to put it in a house where the rentals will be low. It also has an impact on creating employment, or it also has an impact on maybe the business is owned by a woman. It also has an environmental benefit, etc. These are added, nice to haves, but really fundamentally, it comes down to the numbers. It comes down to the numbers and how much risk is it for you to deliver those numbers. If it's like, these are the numbers that could come out, but it's a 50-50 chance, that's a higher risk. If it's like, these are the numbers that could come out and it is a 90% chance for sure, because I have been doing it and it has been delivering this for X amount of time, I guarantee you, you will at least get your money back. Then somebody will be like, okay, that's something that I can invest in. But it is like starting small. You know, maybe you start with somebody that you know who has some money, and you pitch them an amount that's not going to be, you know, their full life savings. Maybe you say, can I have 5,000? Because I've got this very specific order, or this very specific product that I want to launch. Last time it did well, these are the numbers that it did. If you give me 5,000, I can pay you back, plus I can give you 15% interest. Then maybe somebody will want to, yeah. But I think it's more just a lack of information about what can fashion businesses do. And it's really in that documentation, the proof, and the story that you package that somebody can then buy into. I don't think it's necessarily that people just don't want to support fashion entrepreneurs. They just don't have enough information and understanding of what those businesses can do. And it really comes down to the founders. You've got to tell the story, right? You've got to put it all together so somebody can understand and be on the same page as you. Yeah. Sure, the mic is. Maybe start there and then bring it over here.
During your explanation, you were talking about how risky it is, about the numbers. How do you assess the risk of your numbers being met, even if like it may not be guaranteed with your evidence? How do you back up that assessment and make sure your risk evaluation is accurate?
Yeah. So they will look at things like, let's say they'll look at your cash flow and be like, at the end of the year, or maybe you can even do it on a monthly basis, at the end of every month, you always have an extra $500. So if I were to give you a loan where the monthly repayment is $100, because you always have $500 and I've seen it in your accounts, I'm pretty certain that even if it's a slow month, that 500 might be 300. My 100 is still gonna come out. But if now you're like, every other month I maybe get $100 at the end of the month, usually I'm in a loss. Then they'll say, well, if I give you money, it's probably likely that you're gonna be in a loss. So they'll also analyze your accounts to be like, okay, because accounts tell a story. They're okay, you're profitable, but for some reason at the end of every month you don't have cash. Even with an Excel, right? If you have Excel forecasts, if you take it to a financial person, they overlay their own assumptions. They will test those numbers. They'll say, okay, this is her profitability here. If I give her this amount of debt alone at this percentage rate, what does it do to her profits and her numbers? They will do those calculations even themselves and be able to assess. So some people will say, you know what, your business right now cannot carry a loan for 10,000. It can carry maybe 2 or 3. Can you do something with 2 or 3, or it's still not going to make a difference? And then they might assess it in that way. But really, it's about evidence and proof. You've got your track record. You've got something that is backing up what you're saying is going to happen. The more proof you have, the higher sort of certainty you can give to say, it's 50-50, I'm just chancing it, or you know what, it's really like 85-90% because I've been doing it for so long. This is what has been coming out, so I'm quite certain, and this is the capacity that I have. For the people who are like, when you're 50-50 chancing it, it might be friends and family. You can be like, listen, I have an idea. I don't know what's going to happen, but, you know. But yeah, don't take any formal or serious capital on a chancing it, trying it out kind of basis, because you have a lot more to lose as well when that happens.
I wanted to contribute to the previous conversation y'all were having about attracting investors. I think in this day and age, there's also so many different kinds of investors that you can find. I think we touched on it yesterday about venture philanthropists and people like that. And aside from the numbers and the evidence, I think it's our own responsibility to make sure that whatever it is we're offering is very strong and very authentic and very, like, that USP needs to be so clear. Because I mean, in this room, we're all designers, right? Well, most of us. And we're literally gunning for the same people with money, you know? So, you know, for not wanting to look like, you know, Hans when Mbinga walks into the room and we're all flocking there, you know, just make your thing just so good and so authentic. And I think even with how in Zim right now, everyone's like, oh, you know, fashion design is such an NGO embassy thing. It's purely like what you were saying, that people might just not get it and not understand the value in it. But like internationally, Africa is the biggest middle class, like fastest growing middle class right now. So they do want to invest in us. So, you know, we can't wait for them to find us. We have to look for them. And when we do find them, like, all these things need to be ready and your product needs to be powerful, because it's not just them, there's also Nigeria. And, you know, I mean, she's right here and she said, I buy a lot in Nigeria. Yeah. Why aren't you wearing me? You know what I'm saying? Yeah. So we have to not only try to attract investors, but like really be in their face as well, and not just by speaking, but with like a powerful product and the very important data that we spoke about today.
Yeah, and just to add to that, you don't want to fall into the trap. You don't want to fall into the trap of being, I mean, grant funding is great and it helps a lot, but you don't want to be in the trap. I think you had said that there's a trap where you take grant funding and now you're boxed as a NGO charity case type of thing. It's just a business you do to give back and feel good. Whereas you're saying, no, I'm as good a business, as good as an investment as a building, or I'm as good an investment as selling insurance or whatever. You need to aim to ensure that your business is actually a profitable, investable business, and not a business where you're saying, invest in me because of the nice to haves or the social benefits or the whatever. Like, actually stand as a really good, viable, investable, profitable business that it happens to be nice, that you also create employment, you also are inclusive, you also are. But it should still just be a really good investment, standalone, not because, oh, I'm a woman, or oh, I'm this and that. It should just be a really great, viable investment, because you're running your business well, you understand your economics, you understand your margins, and you're operating astutely. So I have 10 minutes left, so I'll just go back to the takeaways. I really thought I wasn't going to be able to fill these 3 hours, but so if you're going to take anything away, 5 key things. Know your unit economics. If you can't explain the economics of one unit, you're not ready to pitch. It has to just be your selling price minus your cost of goods. What is your gross profit? You have to know your margin, because an investor knows several margins. They know the margins in property development, they know the margins in agriculture, they know the margins in food business, they know the margins in whatever, and they'll just look at the margins to say, 60%. Oh, okay, in this other industry, average margins are 40%. There's something to look at here. How do the other costs now factor to affect your operating profits or your net profits. And they just compare. It's literally just comparison based on the same margins. They don't really care what you're selling. They just want to know what are the economics at the end of that and how do they compare elsewhere. Gross margin matters more than your revenue. Like I said, you can say I get revenue of $1,000 every month, but only $150 of that is actually my profit. Margin tells more of a story, and it's super, super important. And then profit does not equal cash. Like I had said, you can be profitable on paper, but still run out of cash. So you need to track your cash flow on a weekly, monthly, annual basis, because that is also going to inform you on how much money do you actually need, and where does it need to go. Then investors ask three big questions, and you have to be ready. Is the market big enough? Can the team execute? Will the numbers work? So you have to have your clear and confident answers. Literally 10-minute pitch to tell your story is actually good enough. And then start now or tomorrow. Start your due diligence organization now. Don't wait until an investor asks. Create your files today. Create that discipline around keeping your contracts, keeping your financials, your receipts, invoicing your clients. And even when you invoice your clients, create databases, guys. Take your clients' numbers. What do they buy? When you're dropping the next thing, hey, I've got an updated version of that dress you bought last season, or this t-shirt, or whatever. Like, keep those relationships going so that you have those repeat customers. So some of the documentation isn't just for being boring in process. It's also such valuable information that should be informing your strategies and how you're planning your businesses. Then, of course, you know, at some point you get to a stage where you have to be a formal entity, you have to get tax clearance, you have to pay taxes. Otherwise, you're just not going to become a corporate entity. And yeah, investment readiness is not about perfection, it's about preparation. Start where you are, use what you have, and do what you can. So thank you. These are my details. If you want to get in touch with me, please do reach out. I'm on WhatsApp, my email there. I think the organizers will share the link for the GPT. Please check it out, try it out. If you're having any issues with it, reach out to me. I'm still trying to tinker with it. It had a few glitches, but yeah, I hope it can be helpful to you. You can run all kinds of scenarios. You can run your biggest wish dream business scenario in there. You can run your real today story in there, etc. So yeah, thank you so much.
Ladies and gentlemen, can I please ask you to give Peggy a loud round of applause, please? Because, guys, I know it was a lot to digest, but from the engagement that we had in the room, Peggy, I believe that you were striking the right chords with each and every creative in this room. And I do know that they'll be equipped to get into the next investor meeting. They will knock on your door.
Reach out. I really love all conversations to do with like early stage businesses, small businesses, growth stories, all of that kind of stuff. So happy to help where I can.
Brilliant, brilliant. No, thank you so much. So this concludes our morning session for today. I would like to please encourage you to complete feedback forms. There is a QR code that you can scan and be able to enter or respond to the questionnaire accordingly. And for those who would like to write manually, you can go and see Nat by the desk on your way out. On that note, thank you very much. We will see you later for those who will be coming in the afternoon for Joe Salter's at 2 o'clock. So we'll see you guys all at 2 o'clock. Thank you so much. Peggy, thank you.